So apparently, when you start saving money, they don't let you keep it all. I'm not sure why. Seems unfair.
It sure does. And here to break it all down for us today, it's Your Dime sponsor with Wall Street Financial Group. It's Chief Retirement Strategist and Founder, Zach Gray. Welcome back.
Excited to be here. Excited to be standing.
Well, yeah, I feel like you're going to teach us a lesson today.
Well, I'm going to try.
Okay, what are we talking about?
We're going to talk about taxes and taxes in your money because you don't get to keep it all. You are right. So I wrote a book a few years back called The Retirement Roadmap, and I said, hey, here's the deal. If you pulled out your portfolio, you pulled out yours, we compared the two of them. First off, I don't know who would be bigger.
Not me.
I don't know. We're just fight for the bottom, I think.
Okay. Well, nonetheless, if there's anything in those accounts, there could be hundreds, if not thousands, of different type of investments in there. But they're only going to boil down to three types. So here's where we go.
Okay.
So I tend to think of this as three types of money. Might be a little tough to see, but I say there's three buckets. It's either going to be taxable in nature, tax-free in nature, or tax-deferred in nature. So there's only three types of cash out there. Now, you can think of a taxable bucket like I like to say this 1099 bucket, okay? So what do you get a 1099 on? Savings accounts, right? Bank CDs, even stocks or bonds. I mean, that type of money is here. So this could be bank money, and what we're thinking about is non-qualified, and that could be stocks, it could be bonds, et cetera, et cetera. As you think about tax-deferred dollars, though, this is where we've been deferring the growth the entire way. We even got a deduction when the money went in. So something like maybe a 401k, maybe a 403b, 457, IRA. The list kind of goes on here as well. Tax-free money, though, is what I like the best. And that is where you're going to find stuff like a Roth IRA, maybe even a Roth 401k, and some life insurance if it's built right. My only point today is to say, start to figure out where does your money sit. I think for most people out there, the majority would sit right here in something that's tax deferred, like an old 401k or an IRA, something like that.
And that means essentially you're not getting taxed on it when it goes in, but when you pull it out, then you are?
100% right. Okay. So I think that the question there is would you like your money to grow, Heather, in your accounts over time?
No. Of course I would. Yes, yes.
Okay. Most people would probably, go that route. Exactly. And as we start to think about the fact that, hey, it might cost more for us to live because of inflation and all these things start to add up, well, of course, these buckets hopefully grow. But when you take dollars out of here, you're going to be in a position that you pay ordinary income tax on that money. This is what I think you should do. I think you should be thinking a little bit about taking money from here, getting it over to here.
Is that hard to do?
Not necessarily. So if you're over 59.5, you can do a Roth conversion. It's pretty simple. It goes from an IRA to a Roth IRA, and you can do so at whatever fits you best.
But you have to be a certain age to do that?
At 59.5, you can take and withhold the taxes. So you don't necessarily have to come up with the taxes out of pocket. Now, I can do it as well under 59.5. I just have to pay the tax out of pocket. I can't withhold it.
Got it.
Here's the only thing to be noted here. I like to talk about this before the end of the year. And so with this, getting out to the viewership before the end of the year, they got to think about doing this by 12/31. They've got to get it done. So be thinking about where does the money sit? Be thinking about where do I fall on the tax brackets? I mean, am I at 10? Am I at 12? Am I at 22 or 24? I mean, where do I fall? And then from there, be thinking about maybe getting some from this tax-deferred space. Bring it on over to tax-free.
What's the importance for doing it before the end of the year? Why is that ticking clock there?
That's the rules. You can always make a contribution to something like a Roth IRA or even a traditional IRA up until April, up until when taxes are due. But you can only make the conversions until 12/31. So we've got to be working swiftly there. We've actually put together a report, and I would love to get it out to the viewers. All they have to do is text the word tax to 815-918-4185, and they can get that report, shine a little bit more light on that. So text the word tax to 815-918-4185.
Do you have pretty drawings on that report like you brought for us today?
They aren't near as nice as this.
I can imagine they are. Thank you, as always, for enlightening us, and draw more often. We'd like it.
Yes, I love
Works
it.
for me.
If you need any more information, you want to text Zach, we'll have the information up on stayliving.tv, as well as a link to their website so you can learn all about how to get your money tax free.
We're close.